Here's another case study, and this one's on the euro dollar. Now I've got this trade open from this morning. It was a bit late, but it was still in the window of opportunity period, at least for scalping the markets. But I don't like to scalp, so I'm going to go for a longer term period trade, and I'll explain why. This is Thursday, and this is the CycleEdge report that we got in the beginning of the week, or last week, before everything was happening. So this report you get before. On Wednesday, the report told us that for euro dollar we're going to have a gain day, and that gain day is important, and it's an apex day. So this is a time when the market could, turn around and make a win to the upside. Why? Because on the daily it's a gain day. So the market went down, and then it went back up again. And if we take a look at the 15-minute chart, this is a 1-minute chart, by the way. I don't trade on the 1-minute chart, I'm just using it to display to you what it looks like. This is the 15-minute chart, right? So on the 15-minute chart, this is yesterday, all right? If you take a look at your trading hours, let's do so. On Wednesday, we had 12.25 for the London. Okay, this is the Asia session, but I'm going to go for the grey days in London. 12.25 and 4.40. Let's take a look. 12.25, 12.25, 12.25 is on that bar. Okay, and then we have 4.30, 4.30, 4.15, 4.30. Right. So the market bounced up from here, came back, just sizzled a bit underneath it, and then started turning around, and it made a higher high. Also, we have the trading hours, which are for the overall market hours, Wednesday, and that was 5:15, 9:40, 10:30. So let's take a look at 5:15 p.m. That's 4:30, 5:15 market coming down, and then 9 o'clock, we're obviously up here. All right, 9:15. So this is where we're at. Okay, and this is how yesterday. Well, let's take a look at Asia as well. So it's not like we've got anything against Asia. 140, 420, 630. This is your 140 here. 420, probably somewhere around here. 415.20, 620, and 620 is here. All right. So the market from the lows, as you can see, has gone to the upside. The important thing here for yesterday to know was it's going to be, according to our map, this is gold, let's go to euro dollar, it's going to be a gain day. So what we want to do on a gain day, obviously, is to buy lows, right? So the first thing we want to do is to identify lows on when they're happening. So if Asia made a low, London made a low, at a trade hour when Asia made a low, London made a low, or market made a low before, around these periods, these are the hours which I want to match to a place where the market bought heavy, right? So I'm looking for buying heavy, okay, at the right time. If the time doesn't match, okay, well, this one matched, all right, so this is spot on, market buys, and it didn't go below that, as you can see, it did not go below that. Just here, well, okay, it did go below that, okay, but bounced quickly back up. Why? Because it's a gain day. So that's the opening. The white line is the opening. The purple line is the closing price. So once the market opened up and closed above, it's a gain day. So if you're looking for a gain day, you want to buy lows, right? And same here, it's a gain day. So what I want to do, I want to enter either at a breakout, which is what I did here, and the first target is up here, and it's 1 to 2. Now this thing can go pear-shaped. Why? because, or it can go, but it shouldn't go pear-shaped. Why? I'll tell you why it shouldn't go pear-shaped. Because we have a volatility window on Thursday at 12:30 to 4:15. Okay, so if that volatility momentum push continuation happens, it should continue the push. All right, but let's say I was wrong and it didn't, then I get stopped out with a 1 to 2 trade, and the other one is 1 to 6, I think, either 1 to 6 or 1 to 7, all the way up there. Okay, because if it does go, it should push into this green rectangle here, if that's the case. Okay, and if that's how it's going to pan out, we should have a high probability trade if it goes in our favor. Now, because this is a volatility area, for the sake of this example, and also for the sake of this time period, you see here it's 2:25. That's my time, by the way. It's Istanbul, right? I'm in Antalya on the south coast. Well, currently I'm in the summer house in Izmir, but it's the same time zone. So from this zone onwards, and also you get the exchange hour here as well. Okay, so if it's the New York exchange or if it's London, whatever, so this is the New York well, euro dollar is not in the New York exchange, but this is an exchange time. Okay, so you can kind of like match your time zone like New York and so on as well. All right, and that's how it is. So from here onwards, what do we have to do? So let me go back to the 1 minute chart. I don't trade the 1 minute chart, I'm just doing this for the example. All right, this is our 2:25 hour. From 2:25 into 4 o'clock, all right, that time period here, 4:15. In fact, let me mark it here as well. 4:15. This is our volatility push, and here the market should push. All right, so that's what we're expecting. I'm going to leave it as it is. We just entered here about 10 minutes ago. We'll see how it goes, but with situations like this, you can keep a tight stop loss, and you could also increase your hit rate, and if it doesn't go in your direction, you've got a really tight stop loss. The important thing here to understand is, once we have a plan for the day, once we know when the day is going to be active, what period is going to be highly likely to be volatile, okay, with a momentum push. A momentum push can go either way, but in any case, knowing these things allows us to manage the trade better, all right, even if we get it wrong. So I'm going to put this up now, and we'll see how it goes. And as you can see, it's all open and transparent, and we'll see how that pans out. Also, like I said, look out for 2:25 here, 2:23. That's my time, so UTC plus 3 is my time. You can match it to your hours and see how it's going. All right.